This conference will now be recorded.
Good morning, everyone. Before we get started this morning, I am recording this and I want everyone to take a moment to read over the risk disclaimer. It is for your protection as well as mine. Basically, regardless of what you're trading, you should not trade with money you cannot afford to lose. Okay? Any type of trading, no matter what it is going to involve risk, regardless of what you trade. Okay? Now, before we get started, I do want to go over the market reports. Today at 1 o'clock, we do have the Fed chair speaking. And then tomorrow at 1:50, we also have the Fed chair speaking again. On Wednesday, we have the Euro group meetings, crude oil inventories, and the Fed chair speaking yet again. We also have the release of the FOMC meeting minutes. On Thursday, we do have quite a few reports on the British pound, plus the Bank of England governor is speaking. We also have the ECB monetary policy meeting accounts, as well as the CPI and core CPI on the USD dollar. Friday, we have the ECOFIN meetings. We also have the Canadian unemployment and employment change numbers coming out. So those are the red reports that you need to be careful about this week. Also, to those of you that have the tools that are in the coaching session, I did upgrade the tools over the weekend. Basically, I upgraded to one is the MTF support and resistance. Basically just made the colors more standard. Okay, you will need to delete the indicator and then reinsert it and you'll get it updated. Also updated the candlestick patterns as well. And again, all you have to do is delete it and then reinsert it and then save the template again. Okay, and that way you can insert them on anything. Now, I'm going to go ahead and get started this morning. And basically, I look at all these time frames that you see on the window. Basically, because I like to see when the larger moves are coming in. For example, today on the Nasdaq, you do see that we are overextended here. So I am expecting some downward movement on that. Now, it might get caught up at 77.22 or even 76.94. Okay. But this just gives me a general overview. Now, with the MTF support and resistance indicator and the candlesticks, this may overwhelm you. So there are other setups that you could use. Okay. So, for example, if you're more of a medium term, in other words, you want to be in the market for a couple of days, at least a day, you might choose the 240 and the 60, okay? Or if you're an intraday trader, you might choose the 60 and the 15. If you're a scalper, you might do the 15 and the 5. If you're a 5-minute binary option, you would do a 5 and a 1, okay? So I've got all kinds of different setups that one could use, okay? So what I'm going to do is just start off on these higher time frames. I do think that right now we will probably get a retracement because of the stochastics on the 240 on the Nasdaq. Now, again, it might get caught up right here, okay? Because these are potential support areas on the 60-minute chart. So you would need to watch out for that. Now, what would more than likely kick off this retracement? It could be a double top here. You would want this candle to be a reversal bar, okay? If you don't know what they are, I mean, they're pretty much marked on the screen. There are others that come in, okay? But, you could just follow the actual candlesticks, okay? You could also look for a divergence as price is making new highs, does the stochastics make a new high over here? Okay, and then that could kick it off. You could go up to the 15-minute chart. Excuse me. You see that the fast moving average is holding it. That could kick it off. If you come down to the 5-minute chart, your entry, your first entry would have been back here where it says the bear market, okay, or the bearish reversal bar. Any questions on that? So there's all kinds of ways you can trade using the indicators, okay? Now let's go and let's look at the ES, which most of the indices tend to move together, not all the time, but they do tend to. Let me pull this down some. Okay, so on the ES, what is more than likely going to dominate today's market? Well, you do need a retracement over here. This tells me that this has the potential to pull back to this ATR over here, but what's going to play out first? This should play out first. Okay, now how could you go about entering that? You see that we just had a bearish bar. Currently, you only have one level of resistance at this area, and that's on the 60-minute chart. Okay, I would anticipate it to come down to this faint blue plus sign here. It could even come down to here as well. It would actually make it better if it had tested this area and gave a divergence, but that's not the setup that we have. Okay, over here, I would like to see this turn into a bearish bar. Okay, I do not want it to be a bullish bar, and then that would likely push it down to here. As far as the 5-minute chart goes, your entry, you had a couple of entries over here. You also had another entries over here. You know, in my opinion, the best ones are usually your first ones. Okay, just my opinion though. Now looking at the Dow Jones, and the one thing that I want to make sure everybody understands, you may get a lot of candlestick patterns, but you have to be at a level of support or resistance, okay? If you're not at a level of support or resistance, then as far as I'm concerned, that's not a valid entry. Does everybody understand that? In other words, you only want to take the ones that are coming off of support and resistance. And I think they're pretty plain on the chart. You see a line of plus signs and lines here. You also see it back here. You see it back here. I mean, these are your support and resistance areas. The one reason that you do that is, hey, if you get a candlestick pattern and it's at a level of support and resistance, and then the candlestick does what it shouldn't do, you know exactly when to exit your trade. And that's a pretty cool technique. Okay. So on the, on the Dow Jones, again, you do see that you are still overextended here. Now this has the potential to pull back into this area here. Okay. So that would be a very short-term trade. I'd probably go down and use like a scalping setup. You can see the bearish bars that are coming in on the 15-minute here. I would like, if you had already entered, let's say you were here, I would want this bar to be a bearish bar, and that is the bar that is currently developing, okay? And then I would also like to monitor, okay, if I think that's where it's going to go and I'm looking to do a short position and we had entered at the close of the bar, which is usually where I enter, okay, what is my risk to reward ratio? Okay, this is your first area of potential support. So your risk to reward is about 1 to 1.5. My minimum is a 1 to 1. Okay. And that way you can actually calculate, before you even enter what would be your risk to reward ratio. Okay, there's just a lot of components that you need to analyze when you're trying to enter a trade. Okay, so I do think we're potentially going to get down to this area. Now, this area, you can see this line of blue crosses here. Okay, that's the last area that supported price. Okay, so that would be where I think that price would go near here. Now, it could stop at the blue dot, but again, I would anticipate it to get here. Okay, over on the Russell. And some of you may wonder why I think that it will get to that point and then push up. Well, all of them have these magenta peaks here. So this will play out because it's overextended, but this is going to play out because it was also overextended. That means that we're likely going to go up to between 1528 and 1540. So this will be a small pullback. This will be a larger pullback. Does everybody understand that? Okay, let's go and let's look at the Aussie dollar. Okay, and the Aussie dollar, I would be focused on the 60-minute because it is overextended. Your entry actually came in here. This bar actually confirmed it. Okay. And I would anticipate this to go up to 67.52. Again, you're seeing that magenta dot over on the ADX. That is what tells you this is likely going to come up to here. Okay, let's say that you're an intraday trader. That's the 15. Well, you could actually use the 15 on that one. No, because that's going to use a 5-minute. Let's go to this one. And you can see that you had your first bullish bar here. It was confirmed here. So that's sort of like a double confirmation here. Also made that double bottom. This is going to kick it off. Now, you also could see it here. Okay. You had a double bottom here. Then you had your, you went back and tested it and formed another reversal bar here. Okay. So any of those would have been potential entry points. It is very important that you set it off of these support and resistance lines because a lot of times, okay, you are going to get a test of that support and resistance. And that's exactly what you see here. They came back here, they tested it, then they tested it again here. Again, if you were to go to the risk to reward ratio, okay, my expectation, especially with that dot on there, would be about here on the reward side. Okay, do you see how you come in beneath this line of resistance? Now, I think 1 pip is a little bit too tight. I would probably go down, let's see, this is at 32. I'd probably go down to 28 on that. Okay, so what was your risk to reward on that? Ooh, if I hadn't moved it. And the risk to reward on this, well, it doesn't want to tell me today. I guarantee you it's over 1 to 2. It's 1 to 2.36. Okay, so you're risking about 8 pips to make a little over 16 pips. Okay. All right, let's go and back to here. Okay, let's go and look at the euro yen. Okay, the euro yen, this is overextended. Okay, you also have divergence there. Okay, so this tells me that more than likely we're going to have an upward move. Okay, if we have an upward move, where is it likely to go? it's likely to go up here to the ATR at 118.47. Okay. Now, if that's going to happen, is right now the time for my entry? No, you actually had entry over here if you knew that candlestick pattern. Okay. And you would have been anticipating this bar. Okay. If you did not enter there, where was your next entry? And your next entry would have been over here on the 5-minute chart. You had the bullish candlestick pattern, and of course, up it went. Okay. Now, will it do the same thing? Yeah, you're already overextended here. You're overextended here. You're going to get a retracement more than likely. Okay. And you could potentially enter off of that retracement. Okay. And again, on this one, you could come right back over here to the euro yen. Look at it. This is a 60 and a 15. Okay. If the euro yen moves pretty quick, you could even come over here and actually use a 15 and a 5. Okay. This would have been your entry. Again, if you know the candlestick patterns, this actually is what I call a micro double bottom. You could have entered here, or you could have entered here as well when you had the reversal pattern. Any questions on that? Now, if you wanted to trade it right now, would you enter? No. Wait for a retracement because you're already overextended on both the 15 and the 5. Okay. Right now it's testing this area. It's probably going to come down some. Once it comes down and completes that retracement, you see a support area develop like it did over here. That's when you would potentially go into the market, but not before. Any questions on that? All right, let's go and let's look at the euro dollar. Okay. On the euro dollar, you're not quite to the point of being overextended here, but if I had divergence over here, I'd probably want to analyze it to the short side. You are going into a resistance area here. Okay. And if you get a bearish bar, you will have divergence there. That may kick off a downward move. The only thing that bothers me about this is normally price doesn't stop in the middle of nowhere. You are at a slow period moving average, but after this magenta peak, I would expect that to get a little bit closer up here. Okay. That's what I would like to see. Okay. But that doesn't mean if you had a setup and it came in that you would not take it. Let's say that this holds, this resistance area holds. Well, then you would have a profit potential. If you went in there, let's say it closed about here, then you would actually have a potential risk to reward of 1 if you went all the way up there. Okay. Let's see where that is in relation to it. And I would actually target more down here. So that would give you the 1 to 2 risk to reward ratio. Any questions on that one? Now, you can fine tune that by going into a smaller time frame. For example, do you see how they just made a double top over here on the 15-minute chart? You could actually take a short position on that. Okay. And in this case, I would at least think they were going to come down to here, and that risk to reward on that is 1 to 1.86. Any questions on that? Now, in this case, you could come over here to the 15 and 5, put it on the euro yen. There's your bearish bar developing. Okay. Now, this one has 30 seconds left. Okay. I'm at 52. Yeah, that's about right. So basically here you have a 1 to 1, but if it comes down to here, which is coinciding with the ATR over on the 15-minute chart, which I would be anticipating because you're overextended here and you're overextended here, then that gives you a risk to reward of 1 to 2. Any questions on that? All right, let's go back and let's look at the GBP, JPY. The one thing that I would notice is that we're overextended here and we're pulling back to the ATR over here at 129.08. This one's going to be a little bit harder to trade. You are overextended on the ADX, not overextended by any means on the stochastics. This is one either I would trade a lower time frame or bypass it. I don't really like the way it's coming in. Let's go and look at the British pound dollar. And the British pound dollar is not telling me much of anything other than this ATR over here is holding, but we have a potential support area at 22.84. To me, that's not enough for me to trade. I'd rather trade a 5-minute binary. So let's go look at the USD JPY. You're almost to the point of being overextended here, not quite, okay? But you're not getting any setup over here or here. And again, this would be one I'd probably go trade a 5-minute binary until I get a move that is setting up on the higher time frames. These are bigger moves. These are smaller moves. And let's go look at the USD Swiss franc. Now, the USD Swiss franc is a real slow market mover. Okay, so I wouldn't suggest that you try to go down and trade, you know, a 5-minute chart on it because it's just too slow. The lowest I would go down on the USD Swiss franc is a 15-minute chart. You do see that you were overextended over on the weekly. I would not pay much attention to that bearish harami there because the week just started. And if you'll notice, these update, whether it's a reversal bar or not, according to the current price, okay? It has to do that because we use the close of the price bar, which means this is the live edge of the market. So as this price moves, this may come and go, okay? But again, I wouldn't read that bearish harami unless it comes in on Friday, and I doubt very seriously it does. The daily's not telling you a lot except that you have hit a resistance area. Okay. What does it mean when you hit resistance area? It means they need to come back and they need to check for a support area that will support price for further increments in price. Okay. Down on the 240. Okay. You're seeing that you have a double bottom area over here. Now, the one thing that this does highlight, and this is a little bit soon to call it, but you have a potential descending triangle. Okay. Your lows are just about the same here. So you have a descending triangle. So this may go down the width of this. Okay. So if I actually look at that and say, okay, that's 27 down to 99.23, that's about 100 pips. So you could expect a 100 pip move to the downside on the USD Swiss franc. Now, here's the issue with that. Might be too early for you to enter. It depends on what you're trading, okay? But if it comes down 100 pips, you're looking at 98.23. And typically the way this plays out, we'll set it here, okay, is it will break through this area. But what does it do when it breaks through support? It tests for resistance. So it will go back and it will test that area. And if it holds, okay, it's probably going to come down to 99.25. The support and resistance indicator just really kind of highlights those areas for me for some reason. Now, what if you don't have a setup on a higher time frame? Well, that's when you have to come down and you have to use these lower time frames, okay? And for example, let's go look at the euro dollar. Okay, let's say that you had entered this. Now this still has about 5 minutes. This tells you that the market should come down. You made a double top, okay? But this bar should close below the low of this bar. What if it don't? I'd get out and take the next trade, okay? Why are you sitting with it if price is already telling you it's not doing what you anticipate it to do? That's a good clue. You probably need to come out. On the USD Swiss franc, you can see that you tested for support here and you're overextended. That was a good bullish bar. Okay. Now you could set your stop directly beneath this. Okay. So in this case, it's 99.34. So if you didn't read your higher time frames and you said, well, I got this, we got support, so I'm going to enter this market because I don't want to look at my higher time frames, okay, you would set your stop just about here. Okay. Any questions on that? Now, could this be making a little micro double bottom? Yeah, it could be. Okay. But again, this is why I like the higher time frames. I would have not taken this trade. I know better. Any questions on that? Let's see, where's this one? All right, let's go look at. And again, okay, on the Nasdaq, what are you anticipating? Okay, given this over here on the 240, I would be anticipating a downward move. Okay. Now, on the 15-minute, you've already had 2 candlestick patterns that actually confirm this downward move. If you're trying to get into it now, you're a little bit late to the party. Okay. But you did have actually 2 really good candlestick patterns there. Let's see if there's one on one of the others. Doesn't have the same setup. What about the ES? If you did, no, you don't have enough room. That's only a 3-point move. Would not like that one. Nope, sorry, nothing there. All right, any questions this morning? Now remember, if you have the indicators for those in the coaching session, I'll go through this tomorrow too. Delete your MTF support and resistance, delete your candlesticks, reinsert them, okay, and then save it as a template because I did update the candlesticks this morning. Hey, Rick, how you doing? I'm still watching that weekly chart. You know that slow moving average on that daily has been holding so far. Yeah, I'm glued to it because that is going to be a major move. It really, truly is. Also, let's see, which one do I want to do? Rick, this is something you might be interested in. Let me find one. It's the inside bar, Rick. Hold on and let me find it here. It'll take me a minute. They don't happen very. Oh, come on. The one time I wanted, I can't find it. There it is. Now, this is on a 5-minute chart. I wouldn't expect it to work out too well. But do you see how that made a low, Rick? And then you formed that inside bar? That's actually a good indication to go long. And the same thing on the top of the markets. And what you expect the next bar to do, Rick, is to close above the bar that made the low or the bar that made the high. Now, are they going to work that great on a 5-minute? No, but when you put these things on a 240 and a 60, they're awesome. Yeah. The key to it is the next bar has to close above the high of this bar. But if you wait for that bar, Rick, it's going to give you your maximum risk. And the other one that will do it is the bull or bear mar. Okay. That's a candle that doesn't have any wicks on it at all. The slower markets will have a lot of them on there because, I mean, not the slower markets, the lower time frames will have a lot of those on there. But if you see one on a higher time frame, that is a really, really strong bar. For those of you that do not know these candlestick patterns, I do have a free guide to candlesticks. Okay. And I just completed it this weekend, and you can sign up for it on my website. And just like when you look at this chart here over on the 1 minute, you see all of these bull bars, but the one thing that I would notice is that you had made this double top. This moving average is holding, and I would be trying to short this, not going long until you had your divergence over here. And if you've been in the coaching sessions, you know what that divergence means. See, overextended, divergence, boom. I was trading in the 5 minutes a lot this morning. So, mini S&P. This is your divergence here. This is where you're starting to retrace. But again, to me, that's just too close of a range for me. I wouldn't want to trade it. Let's go look at the USD. It's coming back to test this area over here. Let's see. 39 up to 64. It's not a bad move on the 60-minute. I'd like to have more, but I'm greedy like that. Any markets y'all want to look at that I haven't looked at yet? Let's see. Let's go to futures. Well, you're overextended over here on the 60-minute, and you could get divergence in here. I would need a reversal bar as it's testing this low over here. And it's developing right now, so I think it will go up today. Especially considering it's at a support area, it's testing this double bottom here. But again, you'd have to wait for that 240 if you were trading the 240. But as it stands right now, you're getting it between the 5, the 15, and the 60. Any other markets? Any other markets anybody wants to look up? I can. Okay, this one has been overextended, so this is telling us down, but this is telling us up because we're at the point of being oversold. Okay. It's still got some room to go here, and it just tested that fast moving average, Mike. So I would think that it would come back and at least test 107.15. That's what I would anticipate. Wait, because you're going to get a retracement at least on the 5-minute, potentially on the 15. Sounds good, Rick. Any other markets, guys? Now, if you don't understand the patterns that are on the charts, I do have a free candlestick pattern guide that will teach them to you. It's about 20 pages, has great examples on it, and even a really simple trading plan that you could use if you're just learning. To get that, you do have to go to TradersHelpDesk.com/get your free candlestick guide. Make sure you have hyphens in between there. And as soon as you subscribe, you can get the free book and download it. Okay. Any other questions this morning, guys? Also, remember, if you're trading the 5-minute binaries, they have increased. They increase at 8:10 until I think it's noon. So be careful there. I wish we had more room here. We just don't have very much room. It's only 3 points. All right, everyone, have a wonderful day. I will be doing another webinar next Monday at 8:30, same time, same place. I will post the link on social media. So everyone have a wonderful week trading, and I'll look forward to seeing you next week.